Welcome to the Warren Method, the go-to channel for unlocking the wealth-building secrets of Warren Buffett, the Oracle of Omaha. Today's deep dive explores a powerful topic: Warren Buffett, 6 investment hacks for retirement you must know. #Warren Buffett. This 50-minute episode unpacks how Buffett uses investment strategies to secure a worry-free retirement, building his $900 billion empire at Berkshire Hathaway. Perfect for entrepreneurs planning for the future, small business owners seeking financial freedom, investors building wealth, or anyone inspired by Buffett's genius. The video covers why retirement planning matters, 6 core investment hacks with real-world examples from companies like Coca-Cola and American Express, a full case study, a comparison with other investors, retirement trends for 2026, and an extended Q&A with actionable steps. Mistakes to avoid are included to save time and money. Drop a yes in the comments if ready to learn how to retire like Buffett. Subscribe to the Warren Method and turn on notifications for weekly deep dives. #retirement hacks. Picture a young Warren Buffett in 1930s Omaha, delivering newspapers, saving every penny. By age 11 in 1941, he bought his first stock. Decades later, he turned that hustle into billions by mastering investments that ensure long-term security. Let's uncover how. Retirement planning is about building wealth that lasts a lifetime, using investments to generate income when you stop working. Buffett's approach focuses on steady, predictable returns, not risky bets. His $900 billion empire at Berkshire Hathaway, as of October 2025, thrives on investments like Coca-Cola and American Express, which deliver consistent cash for decades. #investing. Why does Buffett prioritize retirement-friendly investments? They create financial freedom. The global retirement planning market is projected to hit $1.2 trillion by 2026, driven by aging populations and rising costs. Buffett's strategy, buying companies with economic moats like strong brands or exclusive contracts, ensures income through market crashes. In 2008, while others panicked, Buffett invested $5 billion in Goldman Sachs, securing dividends that grew his wealth. Buffett's mentor, Benjamin Graham, author of The Intelligent Investor, taught him to focus on value and safety. Retirement investments, like dividend stocks or bonds, provide stability. Buffett's quote, "If you aren't impressed with the picture of the future, don't invest." Comment below. Are you planning for retirement yet? Write yes or no to join the discussion. #retirement planning. Hack 1 is investing in dividend-paying stocks to create reliable retirement income. Buffett loves companies that pay consistent dividends like Coca-Cola. #Warren Buffett. In 1988, Buffett invested $1.3 billion in Coca-Cola. By 2025, it pays Berkshire $704 million annually in dividends, a steady cash stream for retirement. Coca-Cola's moat, global brand loyalty, ensures payouts even in downturns. In 2020, during COVID, its dividends held strong. Another example, Buffett's stake in American Express, started in the 1990s, generates $400 million in dividends yearly. Its moat, trusted financial services, keeps cash flowing. To copy, investors can buy dividend ETFs like VYM or stocks like Procter & Gamble. Steps. 1. Use Finvest to find stocks with 3 to 5% dividend yields. 2. Reinvest dividends to compound. 3. Diversify across 5 to 10 companies. 4. Avoid high-debt firms. Buffett skips volatile stocks for stability. In 2026, dividend stocks in healthcare and utilities are hot. Comment: what dividend stock would you pick? Share below. #investing. Hack 2 is buying undervalued companies with strong fundamentals, a Buffett staple from Benjamin Graham. Hashtag retirement hacks. In 2010, Buffett bought BNSF Railway for $44 billion during a market dip. Its cash flow from freight transport grew, contributing $23 billion to Berkshire in 2024. BNSF's moat, unique infrastructure, ensures long-term value, perfect for retirement. In 2009, Buffett invested $3 billion in Dow Chemical's preferred stock during the financial crisis, locking in high returns. He targets companies with low prices but high intrinsic value. To copy, use discounted cash flow (DCF) to find bargains. Steps. 1. Research on Yahoo Finance for undervalued stocks. 2. Use free DCF calculators from Investopedia. 3. Buy during market dips. 4. Hold forever. Avoid chasing hyped stocks. Buffett skipped the dot-com bubble. In 2026, undervalued sectors like energy and industrials offer retirement security. Like this hack? Hit the like button. Hashtag retirement planning. Hack 3 is diversifying investments to reduce risk without diluting returns. Buffett diversifies strategically within his expertise. Hashtag Warren Buffett. Berkshire's portfolio spans Coca-Cola, consumer goods, American Express, finance, and BNSF, logistics, generating $50 billion in cash flow in 2024. Buffett's quote, "Diversification is protection against ignorance, but you don't need much if you know what you're doing." He avoids over-diversification, focusing on quality. To copy, spread investments across 5 to 10 sectors with strong moats. Steps. 1. Pick ETFs like SPY or sector-specific funds like XLE. 2. Allocate 10 to 20% per sector. 3. Monitor performance yearly. 4. Avoid trendy stocks without fundamentals. Buffett skips crypto for proven assets. In 2026, diversify into healthcare, tech, and utilities for retirement stability. Comment, how diversified is your portfolio? Share below. Hashtag investing. Hack 4 is avoiding high-interest debt that drains retirement savings. Buffett hates debt unless it's strategic. Hashtag retirement hacks. In the 1980s, Buffett avoided debt-heavy acquisitions, focusing on cash-rich businesses like See's Candies, which generated $2 billion in cash by 2024. He used low-cost debt like Berkshire's bonds only for high-return deals. To copy, pay off high-interest debt, credit cards greater than 10%, before investing. Steps. 1. List debts by interest rate. 2. Pay highest first. 3. Invest savings in low-risk assets. 4. Avoid borrowing for speculative bets. Buffett's rule: debt should create more value than it costs. In 2026, rising rates make debt management critical. Comment, what debt would you tackle first? Share below. Hashtag retirement planning. Hack 5 is minimizing taxes to maximize retirement funds. Buffett plans tax-efficient investments. Hashtag Warren Buffett. Berkshire holds stocks like Coca-Cola for decades, avoiding capital gains taxes. In 2011, Buffett's $9 billion Lubrizol acquisition used tax-advantage structures, saving millions. His quote, "Taxes are a bigger hurdle than inflation." To copy, use tax-advantaged accounts like IRAs or 401(k)s for U.S. viewers, or local equivalents. Steps. 1. Consult a tax advisor. 2. Invest in tax-free bonds or ETFs. 3. Hold investments long-term. 4. Avoid frequent trading. Buffett minimizes tax drag for higher returns. In 2026, tax-efficient ETFs and municipal bonds are key. Comment. What tax strategy would you try? Share below. #investing. Hack 6 is prioritizing patience over trying to time the market. Buffett waits for the right opportunities. #retirement hacks. In 2008, Buffett invested $5 billion in Goldman Sachs during the crisis, holding for years to earn massive returns. His Coca-Cola stake, held since 1988, grew from $1.3 billion to $25 billion by 2025 through patience. To copy, focus on long-term gains. Steps. 1. Set a 10-plus year investment horizon. 2. Ignore market noise. 3. Reinvest dividends. 4. Avoid panic selling. Buffett's rule. The stock market is a device for transferring money from the impatient to the patient. In 2026, patience wins in stable sectors like consumer goods. Comment. Are you a patient investor? Share below. #retirement planning. In 2026, retirement planning is critical. 3 trending opportunities align with Buffett's hacks. #investing. Healthcare stocks. Aging populations drive demand. Invest in firms like Johnson & Johnson for dividends. Sustainable ETFs. Green funds like ESGV offer growth and stability. Align with Buffett's long-term focus. Fintech for retirement. Robo-advisors like Betterment optimize portfolios. Use them for tax efficiency. Apply Buffett's hacks. Buy dividend stocks, undervalued companies, diversify smartly, avoid debt, plan taxes, stay patient. Steps. 1. Research trends on Google Trends. 2. Start small with $100 in an ETF. 3. Reinvest profits. 4. Build moats like long-term holdings. Avoid get-rich-quick schemes. Here's an extended Q&A to make this actionable. #Warren Buffett. Do I need millions to copy Buffett? No. Start with $100 in an ETF like VYM. A beginner grew $1,000 to $10,000 in a decade. What's the biggest retirement risk? Market crashes, but moats like dividends protect. Coca-Cola paid through 2008. How to find good investments. Use Yahoo Finance for dividend yields and low PE ratios. Network locally for opportunities. Best resources? Read Buffett's shareholder letters, free on Berkshire's site, The Intelligent Investor, or watch The Warren Method. Buffett's 6 retirement hacks. Dividends, undervalued buys, smart diversification, debt avoidance, tax planning, patience are timeless. In 2026, apply them to healthcare, sustainable ETFs, or fintech. Start small, think long-term, build wealth. Smash the like button, comment your top takeaway, and share with a friend planning for retirement. Answer this poll. Which hack was your favorite? 1, 2, 3, 4, 5, or 6? Subscribe to The Warren Method and hit the bell for more Buffett deep dives. Next video. Buffett's retirement secrets for beginners. See you next week. #retirement hacks.